Good afternoon. Thanks, everybody. Appreciate you taking a few minutes with us. My name is Jim Fischer. I'm a partner at DLA Piper in the venture capital, emerging growth, and M&A space in Short Hills, New Jersey. Real pleasure to be here with you today. Let Kathleen introduce herself. Hold it closer to my mouth. Is that better? There you go.
Good afternoon, everyone. Kathleen Coviello. I'm with the State Economic Development Authority and lead a lot of our innovation and investment activity, which you'll hear more about this afternoon.
And I'm Sean O'Sullivan. I'm with SOSV. It's a large medium-sized venture capital firm with a lot of startups that we back here in New Jersey and around the world. And I'm here, I think, to talk today about HACS, which is our New Jersey-based program for backing 100 new startup companies here in Newark, New Jersey, out of our location in Newark.
So we'll start right there. And Kathleen, maybe you can describe for us what the HACS program is and the relationship with SSOV and the EDA.
Great, Jim. Happy to. So if folks were here last year, they heard a little bit of a preview on this, and so we're happy to kind of fast forward a year and share where we are, but a little bit of background for you all. So as you heard this morning from Governor Murphy, he's extremely focused on a platform around innovation in the state of New Jersey. And we know entrepreneurs are a significant contributor to job creation in the state. And those are very sticky jobs, right? So you start to create a team, they're going to a location, you build the team, and they build homes and are part of the community. And they don't go through the same job cycles that larger corporations do. So from an economic development standpoint, really a home run. New Jersey has a long history in innovation, but we've seen it diminish in the last few years, and we want to bring it back to where we used to be. And part of that is really around the talent that we have here. And so we were looking at ways to increase investment in the state. At the same point in time, there was a renewed focus coming through kind of the first year of COVID around manufacturing in the state of New Jersey. And at that point in time, we got a call to action from our friends at SOSV who said, we want to bring our hard tech accelerator to the states. And we're looking for a state to partner with us and do it. And so it was part of a competitive process, and I'll have Sean talk to it from the SOSV and HACS side in a moment. But really for us, it was quite a unique opportunity. It was a top-tier venture firm focused on early stage investing, and that was really the place that we wanted to play in, was that early stage space with manufacturing in New Jersey. And it became very competitive. And fortunately, we had a governor with a vision and a mission around innovation and the support of the legislature. It was right around budget time. And I remember HACS and SOSV had a response deadline of June 1. And we said, can you push it just a little bit later so we can get done with the state budget? Again, really because of the forethought of the governor and the legislature. So we created something called Strategic Innovation Centers. HACS was our first part of that initiative, and it's an investment. So we are a co-investor in the HACS initiative in the state of New Jersey. It's an equity partnership, something, again, we've never done before, but we thought it was a really creative way to make sure that we were aligned. And so that's really what we want to talk about today, too, is the alignment around manufacturing, clean energy, decarbonization, and partnering. And you'll hear a little bit around some of the partnering with universities as well. So the great news is HACS was our first investment. The hub in New Brunswick, many of you may have heard of, was our second strategic innovation investment, and we're in the midst of diligencing 3 others at the moment. So really looking for a place-based economic development with like-minded partners where it's kind of a one-to-many ratio, where we are an investor and us, along with our partner, are going to help support a multitude of companies grow in the state. So maybe if I could turn to Sean just to talk a little bit about the process and how we got here.
Well, I think what people maybe care about is not so much how we got here, but why it's a great place to be, where we are now. So I'm going to maybe take that angle, not answer your question directly. But it actually is a really great deal for New Jersey. Wherever wherever we place one of our innovation hubs for SOSV, we attract the world's best talent to come. We get thousands of applications. SOSV gets 8,000 applications every year to join one of our programs. We only select about 125, and one of our centers is here in New Jersey, the HACS Center, and that is a manufacturing center. And if you know anything about job creation, you know that manufacturing actually, if you have one manufacturing job it actually creates 6 jobs in the community around it. So it does have a lot of potential on that front. The state put up $25 million. We're investing directly $25 million into the very first stage of investment, but in fact, SOSV actually invests much beyond just that first stage of investment. The first stage is where we invest $250,000 into any startup that matches the criteria that we're aiming for: human health, planetary health, and industrial independence are the 3 areas. Industrial independence, think of that as reducing our reliance on an unreliable supply chain of manufacturers outside the United States, bringing more onsourcing and insourcing jobs here to the United States rather than outsourcing jobs. And the time is now, because of some geopolitical instability that we're seeing around the world. We've all seen how people invested a lot in Russia, and that didn't work out so well, tremendous losses there. We need to have, we saw through COVID how we were dependent on unreliable trading partners, and we couldn't actually produce for ourselves what we needed at the time. We are playing on that theme, which is happening all over the place. It was 10 years ago, 15, 20 years ago. Actually, the U.S. has always been very strong in manufacturing, and actually it hasn't decreased as a number, but it has decreased as a percentage. It has been decreasing as a percentage of our economy for about 40 years through every administration. We think now, with the decrease in globalization, that it's more important to have the manufacturers here. But in terms of how we invest, we're investing $250,000 into 100 companies, around 20 new companies a year. That will attract probably initially within the first several years around $700 million of capital, which is why it was such a smart idea for New Jersey to invest $25 million to get $700 million of capital into the startups that are going through these programs. Very effective use of my taxpayer dollars, and I'm a large taxpayer in New Jersey.
Thank you both. So just before we talk more about the HACS program, maybe we could talk a little bit about what other programs the EDA is sponsoring, and speak a little bit about some other opportunities people may have in that regard.
Yeah, sure, happy to. So you heard me talk about our big vision around strategic innovation centers. Stay tuned for more announcements in the coming months. We're really looking at strategic innovation sectors, so things like fintech, life sciences, and aviation. So just a little hint on what the future might hold. We're also really focused on manufacturing, as I mentioned. So there was some funding in the state budget around manufacturing. The governor is expected to make some announcements very soon, so I don't want to scoop him on what's coming to support manufacturing in the state. But 2 kind of initiatives that might be important to this audience, and the intro comments had a reference to it. So Governor Murphy mentioned in his comments this morning the New Jersey Innovation Evergreen Fund. It was kind of a vision early days in the administration about how we create a unique platform for venture capitalists to get more involved in the state of New Jersey. I was sharing with Sean earlier, over 68% of venture capital investments in New Jersey come from out-of-state investors. So we want to find a way really to leverage those investors, get them to spend more time in the state of New Jersey. And so this Evergreen Fund, we think, is a fairly unique platform for that. We're in the middle of fundraising for it. So just like Sean's got to go out and fundraise, I'm out fundraising, but we're using our corporate tax credits as our leverage to raise capital. So we announced a $30 million state tax credit auction. We just earlier this week upped the dollar amount to $50 million, given the strong demand. Our auction closes out Friday at midnight. And so we're excited about those participants. And those participants are larger corporations that are paying taxes in the state of New Jersey. They have to bid on two things. One, how much in tax credits they want to buy from the state and at what price. There's a 75-cent floor. And two, how they want to support the innovation economy. So it's really about engagement, right? I've talked to so many entrepreneurs over the years that want to sell into large pharma in the state or sell into telecom in the state, and they don't have an on-ramp. And they're literally dying, waiting on the vine and running out of cash trying to get into these companies. And so this platform will bring kind of those large corporates to the table. We're creating an advisory board, and there's this curation that'll happen. Those companies are saying, I'm going to commit to entrepreneurship in the way of, creating a co-working space or making an investment in Tech United or supporting interns in my office. So there's a whole gambit of ways that these corporations can support the innovation economy. Some of them have kind of small focuses, and they're ramping them up. But we left it up to the corporations to pick how they wanted to be engaged with this economy. So that's kind of piece one. We'll raise this $50 million, and then we're going to put it to work. But we're going to put it to work using the venture capitalists that know how to make good investments, that have a strong history of investing. So you don't have to be a New Jersey VC. You can be one of those 68% that come out of state to invest in New Jersey. And you can pull down up to $5 million to match up to 1-to-1 whatever you invest in a New Jersey business. So VCs from out of state get to double down on their New Jersey investment, and then our Evergreen Fund will follow lockstep with them. So we're really excited about it. We've heard great feedback from the investment community around this. And they've already vetted with their traditional LPs what the terms should be. So we're just following whatever those terms are. So the VCs will approve them. We're going to start approving VC managers in December. And then once they're approved, they make the investments. So the VC managers will come to us and say, yep, I want to invest in a New Jersey company. It meets the minimum threshold of 50% of their employees in New Jersey. And, I want to access and draw down these funds. What it means for the entrepreneurs is that you have more resources, right? So we're kind of going to post our good housekeeping list of VC partners. Those VC partners will make commitments to meeting with New Jersey entrepreneurs. So we think it's kind of a full loop circle to help build the innovation ecosystem in New Jersey. Two other quick things I'll mention. One, our board just approved an angel matching fund. So just as it's important to work with VCs, we know it's important to work with angels at the very earliest stage. So we will match at a term sheet level a commitment from an angel. The angel will have to close in order for us to close our deal, but we hope that it's very causal. We're using some federal funds for this. We'll go up to $500,000. Our funding is a 10-year note with no payments for 7 years. It's a convertible note, so certainly less dilutive than straight equity for the entrepreneurs. And if you're familiar with warrants, it has a warrant attached to it so that the state can share in the upside. And then finally, as many folks might know, New Jersey has a really unique program where you can sell your state losses. So we just ran our program. It's an annual program. The governor increased it from $60 to $75 million. Fully subscribed this year at $75 million. And the average company got over $3 million. So $3 million non-dilutive capital. You spend any way you want. You just have to commit to stay in New Jersey for 5 years. So a lot of the investors love it because it's less dilutive. Entrepreneurs love it because it's less dilutive. So once a year, based on your New Jersey taxes, we run this program, opens in early May. So again, just trying to fill in the gaps in the marketplace and really have those private-public leverage partnerships. Both angel and VC, and then for companies that say to us, I don't want to raise outside money. I want to hold 100% of the equity. Selling your losses is a really creative way to do that. I was sharing in the prep session for this, we've actually gotten calls from the bio industry in California and they want to try and replicate this. So, I think we're doing things differently in the state, and folks are starting to notice.
So let's turn back to the HACS program and talk about some recent successes and kind of what you see in the early stages here as we venture in. John?
Well, I'd like to double down on how important what Kathleen was just talking about is. A lot of times an entrepreneur spends 3 months, 6 months, 9 months chasing the dollars to round out a term sheet. And what the state is doing here by doubling the investment from a lead investor in the firm is shrinking the amount of time and accelerating the progress of how the startup no longer has to spend many more months after they get their initial term sheet coming up with the rest of the round or just simply enlarging the round size. It's very attractive the way it's structured for the VCs. It's actually much better than anything I've seen, and it makes sense for the state as well. So pretty smart stuff going on in New Jersey. It must be all those fintech people living here on this side of the river that have figured out how to use the system right. But answering your question, what's going right at HACS right now? Well, we just sort of got the approval to do this about a year ago. I have a couple of dignitaries from HACS here in the audience. Susan Schofer, can you stand up, please? He's a chief science officer, PhD out of Caltech. She's running as partner here at HACS and SOSV, involved in the selection committee. If anyone is interested in joining the HACS program, please seek out Susan or Dylan, right next. Dylan, stand up, please. And I'm sure MJ or somebody else is in the audience. Oh, Akeen is right here as well. Stand up. Akeen manages our community. Oh, MJ, there you are. So we have a good selection of HACS folks right here. So what's going right? Well, the team is, we built a team. So there's 7 people now. We're building on to the team as it'll be even larger when we have our permanent space built. We have a temporary space where we already have 6 companies on the ground, actually 6 new companies on the ground. 3 older HACS companies have moved to New Jersey, an extra benefit to New Jersey to be part of the ecosystem that we're creating here. And we have another 3 on the way. So in the first 12 months since I think we signed the deal or announced the deal, we are up and running with real money being invested in these companies, and already some of those companies getting seed round investments. This seed round is sort of the $2 to $5 million round investments after only being in the program a few months. So we're starting to see some real leverage from all the work that's happening already. And another great thing that's happening is that with our community engagement work that we have, we're working with a lot of the world's best universities. And just last week, I think we announced, or was it last week or today or something, we announced that Princeton University's PRISM program, which has got tens and tens of millions of dollars of high-end materials development equipment, we're able to have the HACS teams use their high-end research equipment for their development. And just so you know, HACS is a deep tech, hard tech firm. We're working on the toughest problems that humanity faces in solving human health and planetary health, and in particular this focus on climate change. About 40% of what everything at SOSV invests in is in the climate change area. These are real hard physical problems. You can't do this with software, and you can't do this just with some new business model or some social network. This is deep science, deep engineering work, and we're partnering up with other universities as well here in New Jersey, Rutgers and NJIT. We have some great partnerships there. So really leveraging the work here in New Jersey, as well as we're attracting people from all around the world. Probably half of our companies come from outside the United States. In the HACS program, probably 60% maybe even come from outside the United States. And one of those companies is actually coming from as a result of the PRISM announcement with Princeton, we have some deep tech researchers from Oxford University. So immigrants are welcome, even if you're coming from the UK, to start up really deep tech companies as a result of that.
And can you just talk a little bit about how a founder engages with hacks? How does somebody initially get involved, and what are the first steps?
So the first steps in getting engaged with hacks is to, we have a hacks.co/apply or sosv.com/apply, and they can give a short description of what they have, because we're really looking for people that just don't have an idea. They actually should probably have a prototype of something, and so they've proven that they've developed the science or engineering in some way. They've proven they can create something from nothing, and those are key characteristics. We also need a team, so that it's not just one single founder. The team, a founder needs to be able to attract another great participant. So it's a founding team of at least 2 people, and sometimes up to 5 or 6 people on a founding team. Those are the 2 minimum criteria, and then they apply. Then we give them if they accept. If we accept them, then they get an offer for $250,000 to join the program, and then we follow on after the program. The typical Hacks team, after sort of 6 months or a year spent with us, will then raise around $2.5 million on their subsequent rounds, and then raise further rounds of up to tens of millions of dollars on their further rounds. So that's how the progress goes, and we're just really at the beginning stages of all of that right now.
Yeah, and if you could just elaborate a little bit on the post-hacks program. What happens after they leave the program or successfully kind of launch into their own world?
Yeah, so they're part of.
Grow in New Jersey.
Oh yeah, and why in New Jersey?
They're going to grow in
They're
New Jersey.
They're growing in New Jersey. That's right. They're growing in New Jersey. So yeah, and that's true. Like even with our other programs in other parts of the world, like in San Francisco, we have a program for our Indie Bio program. We found that companies come from all over the world, and then they'll actually stay in the Bay Area. This is a great area to stay in because not only is there the tremendous technical resources of the talent in this region, but there's, we happen to have the world's financial capital across the river, as well as inside, a strong financial presence in New Jersey itself. But that allows, what we're trying to do is fill the gap at the seed stage, at the pre-seed stage, and it's very helpful with these angel programs. It's helpful with these seed round programs that Kathleen's talking about to fill out those rounds more quickly. But then when you get to a later stage, you have severe access to capital right here in New Jersey, and it's so accessible. It's so accessible with one of the world's most active airports here, as well as all of the other manufacturing capabilities that we have with the ports and everything else in New Jersey.
Yeah, if I can add, so when we were in early discussions about this partnership, one of the things that Hacks asked us to look at was the manufacturers. So we worked with New Jersey Manufacturing Association to really go through and give them, based on SIC codes and areas around Newark, which is where Hacks ultimately located, on all of the support via the supply chain for manufacturing in New Jersey. And the other thing I would really point out is the partnership around engagement in the community for us was key on our investment in Hacks. So, Sean was being modest in his discussion about talking with the universities. I saw Greg Townsend from Stevens in the audience a few minutes ago, but the partnership with the universities has been incredible. So, Rutgers has said it to me, NJIT has said it to me, Stevens, Princeton. It really is about kind of building from the education level, and the talent and engineers that we have in New Jersey is really top in the country. And I think that ability to tap into that talent, and it goes both ways, right? So for the folks in our universities to know about entrepreneurship and the ability to build a company is critical. The ability for the companies that are part of the HACS program to tap into that talent, it's a win-win for all of us.
And just one other thing, a lot of times New Jersey, I mean, you hear about a lot of entrepreneurs that have been doing so well. Actually, we've had a couple of them ourselves where we've taken, before we had a program here in New Jersey, where we took great entrepreneurs and they created huge companies out in Silicon Valley. Now, we're now, with our HACS Fellows program, we have talent, PhDs and MBAs all across the country at universities like Stanford and the UC system, the University of California system, at Caltech, at MIT, at Harvard, at Carnegie Mellon University. And we're bringing some of this talent from the rest of the world back to New Jersey, as well as keeping more of the New Jersey talent here and helping them grow here.
Well, we are out of time. Thank you very much, Sean, Kathleen, for explaining the HACS program. We hope you enjoyed it and have a wonderful rest of your day.